The Eurodollar's nose. What does that mean? That's the title of Jeff Snider's Alhambra Investments blog post. He's the head of global research at Alhambra Investments. He posted it on the 8th of September. Might it be the camel's nose coming into the tent, but now we're saying it's a Eurodollar? I'm not sure. We're going to ask him. Jeff, we're going to go back in time and not talk about whichever Eurodollar event we're on now, but we're going to go back to 2017 to talk about the FedWire version of Eurodollar number 3. What was it? It wasn't quite the same, but it was also a break, a date, a set of dates. FedWire, for those of you who are joining us, went offline on the 24th of February 2021, and on the 24th, 25th, and 26th, we saw all sorts of inflection in markets around the world, suggesting that the post-corona, the reopening boom recovery was ending, pausing. Globally synchronized growth had a similar end, pause moment in 2017. Jeff, when was it? What happened?
Yeah, I don't know what the Eurodollar's nose is either. I mean, I certainly, nose is prominent on my face, so maybe I'm just thinking about noses in general, but it really does seem to be, okay, yeah, let's set the scene. September of 2017, globally synchronized growth. Inflation hysteria was just starting to percolate. Everybody was getting really confident and optimistic that, hey, even the Federal Reserve is going to tighten its balance sheet. QT is going to happen. That's how good they think things are being. And I think that was the general consensus that, hey, maybe for the first time, yeah, there have been a couple false dawns prior to this, but maybe this one is going to stick. This is going to be the one where we finally put the 2008 crisis behind us and re-enter the legitimate economic boom that had been taken for granted before then. And that was really September of 2017. It seemed like everything was going the right way. I mean, it's the globally synchronized growth. That's kind of the impression that you're left with, is that everything is going the right way in the right manner at the right time. Except in early 2017, well, even before then, there was anomalies that sort of made you think that something wasn't right. But then those anomalies really registered. I think it was September 5th of 2017. You saw the T-bill rate skyrocket out of nowhere. Well, seemingly out of nowhere. And then, as you pointed out, Emil, just like FedWire in February 2021, a lot of the charts started to move. There was inflection points all around early September 2017, where if you didn't buy into the whole globally synchronized growth slogan, what you said was, wait a minute, what the hell is going on here? Because this is starting to look like not globally synchronized growth, but unsynchronized bad things appearing and appearing more frequently.
The first one that we're looking at is what you just referenced. A spike in yields, and it was a one-day spike. It was incredible. We could ignore it, except what did we see? We saw that very same day repo fails, meaning banks were refusing to return collateral. They were reporting that they didn't receive the collateral they expected to be receiving that day. And we saw a spike that day. We saw a gold price inflect on the 8th of September. We saw the Hong Kong dollar and Chinese currencies inflect. You don't list it here as well, but we had copper prices inflect and cross-currency basis swaps as well. I don't remember about swap spreads. Maybe you can, if you remember off the top of your head. But we had all these disparate measures, totally unrelated. Hong Kong, China, copper, gold, repo fails, swap spreads, basis points, cross-currency basis swaps. They all
it's just like FedWire, right? Because September 5th, 2017 was nothing. There was nothing really. I mean, yes, it was actually it was the fear over the debt ceiling that maybe that wasn't going to be managed properly, and it was just a one-day kind of a break, which was kind of what FedWire was. This, markets experience disruptions and all sorts of unforeseen circumstances all throughout time. Yeah, but why did that one turn out to be such a big deal? Because, as you just pointed out, it showed up in all of these charts that said, wait a minute, something changed here. In the same way, February 2021, in the wake of FedWire and then the quote-unquote bad auction in the 7-year Treasury notes, something changed after that. And it was such a clear inflection point that didn't seem to be congruous to what had actually seemed to have caused it. which was this little nothing, this little tiny thing we should never have, certainly made that kind of impression. And that's really the similarities that I think we want to get into. And what we're really talking about here, February 2021, September 2017, the Eurodollar's nosing into moving in the wrong direction, is fragility. It's that, part of globally synchronized growth, and certainly part of the flood of digital money in the post-COVID era of Jay Powell's, QE6 forever kind of a paradigm. We're not supposed to see a fragile system. You're supposed to be seeing a resilient system, as Janet Yellen used to say during her tenure. Globally, everything's going well, and that includes a monetary and credit system that is now completely healed and fortified, impervious to bad things. That's the impression that you were left with. And I am entirely sympathetic for the vast majority of the public who believe that that was the case. But yet here we see this little nothing, this little tiny spark that blew up the whole thing eventually because the system wasn't resilient. The system wasn't impervious. In fact, it was incredibly fragile. And there were we talked about this before, T-bill prices below RRP before September 2017 already told you something was wrong. And then you had this little tiny spark that turned it into so much bigger than it was. And it actually turned out to be the turning point. From that point forward, that third reflationary period started to get weaker and weaker and weaker, so that by the time you got to 2018, it was full on Eurodollar number 4.
And it's in September 2017. I remember this. You quote yourself here, but I remember reading it at the time. You write, it started with repo, and that part is confirmed. The real question is what all this means, up to and including whether it marks, like the fails in June 2014, and you put this in bold, the start of whatever the next phase of the Eurodollar decay might be. Some of the measures that we always look to, however, still continue believing in reflation, including bonds from not just the United States, but Germany and Japan. And the dollar sort of signaled reflation. And that's what's going to segue us to present day, the dollar. But I'm going to pull up the dollar from 2018, 2017. And Jeff, just tell us what you're seeing here, and then we'll take a look at the dollar today.
Well, that was the other part, going back to 2017. Globally synchronized growth was bad for the dollar exchange value, which, weak dollar correlates with good economic growth around the world, as you would expect, because what a weak dollar actually is the Eurodollar system creating an abundance of monetary resources and then redistributing around the world so that good economic growth, legitimate economic growth, can actually take place. So it wasn't so much a weak dollar as it was reflationary trade throughout the monetary system. Some people posited that this was the beginning of a dollar crash and whatnot, and so there was all sorts of rhetoric around that time that, hey, the dollar's going to fall out and go to zero, all that kind of stuff too. But what were really, at that time, globally synchronized growth and weak dollar, those things were correlated and they were actually taking place up until around September 5th of 2017. Now, what you had was about a 1 month spike in the US dollar, which was one of those, hey, did something happen here? Maybe it's not, it's not the end of the world. It's not a full-blown Eurodollar event, but it's something. Something took place here. Again, as you pointed out, Emil, it was gold, it was repo fail. We saw it in all these market indications, and we also saw it in the dollar's exchange value, which seemingly out of nowhere just reversed. Again, fragile system. It wasn't a dollar crash. It wasn't a weak dollar. It was just simply a reflationary dollar, which is a completely different story.
And then it rose for a couple of, lost value again, depreciating, because perhaps things were going to pass, whatever that little bump was, until about February 18th, when it paused, it hit its low, and then it kind of traded sideways until April. And that time difference
then
was
it shot higher.
Yes,
right.
Yes, and then
nobody was expecting it to shoot higher, and I think that's what we're really talking about here. Is that, look, what happened in September 2017 was a precursor warning to what was going to happen throughout 2018. As I wrote in 2017, what I was saying was essentially, maybe this is a warning sign that the system is so fragile that things are already starting to work against that trend. That's exactly what happened. By early 2018, it became so obvious that even the dollar's exchange value was making it impossible to ignore anymore, even though the mainstream media ignored it completely and started talking about the labor shortage in the US almost exclusively. But what that meant was the fragile system, it doesn't just break all at once. It's not like it just snaps and it goes from working one day to not working the next day. These things are processes, and they're multi-month and multi-year processes, and they build up and build up over time. And though the boundary between reflation and the next Eurodollar event isn't a bright dividing line where it's one day to the next, it's a series of essentially escalating warnings or escalating situations or events or anomalies, whatever you want to call them, where we look at these things and say, something must have happened here, something seems to be changing, or something has changed such that what we thought beforehand, reflation or the system moving in the right direction, the economy moving in the right direction, suddenly that's not such a clear picture. And then at the other side of it, it becomes a clear picture again, just in the other way.
Except for people that are watching this show, they'll have been warned. They'll have seen it coming. The two words that you were using that year, I remember, were escalating and ratcheting the effect, tightening. Let's look at the U.S. dollar.
Emil, that's what the dollar was doing in late 2017, early 2018. You had that, the reflationary downward trend. Then it just kind of broke for a month or 5 weeks, whatever it was. And then October 2017, it kind of went back into the sinking thing, and everybody went, oh, that's fine. And then February 2018, for a couple months, it went sideways. And that was the ratcheting effect as more and more things started to go wrong, more and more negative signals, more and more accumulation of all of these anomalies becoming more frequent, becoming more serious. And then finally in April of 2018, the dollar just pops higher, seemingly out of nowhere, when in fact there are any number of signs that have told you reflation number 3 was dying. Globally synchronized growth was nothing more than a bumper sticker. The US dollar, the global Eurodollar system was not resilient. In fact, it was incredibly fragile, especially with collateral, and that was becoming a problem, as it had repeatedly throughout the last 15 years.
If memory serves me right, Argentina was already in negotiations with the IMF before April, before their currency started going the wrong direction. That was just another one of those indications that something's wrong. You remember they had the president, Macron, who was this liberal, internationalist, technician. Everything was going to be great again, globally synchronized growth, but it went pear-shaped. Jeff?
If you were just paying attention to something like that, it seemed like it came out of nowhere.
Right.
Everything was great, and then, wait a minute, what are all these countries going bankrupt? Why is Argentina being given the largest bailout in history? Why is there an emerging market crisis, and why is these currencies dropping all around the world? It seemed out of place and out of nowhere, when in fact it was not out of place, nor was it out of nowhere.
Pear-shaped, I just mentioned it. Is this graph that I'm pulling up now, where you overlay the 2017-2018 experience of the US dollar to the 2020-21 experience of the US dollar, would you describe that as the shape of a pear, a banana?
It almost looks like the constellation, the Big Dipper.
Yes.
I don't know.
Big Dipper shaped. What are we looking at in this
shape. I don't know how, but that's just because we don't see the right-hand side of the chart where the dollar goes up much higher. Just kind of cut it off there just to make the comparison more toward the left side than the right side. And that's really what we're talking about here, is that, again, commonality. Late 2020 sounded a hell of a lot like, in the mainstream description, late 2017. All the dollars going down, inflation, economic growth is picking up. We've got all these good things happening, vaccines, stimulus, blah, blah, blah. Everything was good and everything is dollar negative. And then early January 2021, when everything was supposed to be going exactly the right way, just like September 2017, suddenly the dollar popped higher out of nowhere. What's going on here? And during that pop higher in early 2021, that's when we saw FedWire. That's when we saw the February 25th and 26th stuff and everything else start to happen in charts everywhere else. So it wasn't exactly the same timing as it had been in September 2017, but it was pretty darn close. And as you can see on the chart I'm showing you here, the dollar's exchange value seems to be eerily similar in what it's doing as well. And again, fragility becoming something more fragile before becoming a big problem?
Couple of points. The first one is that dollar you're showing there is not the DXY index, which we've talked about before, which was really just effectively the euro, and which is what traders reference.
You could use DXY, you could use the emerging market trade weighted dollar. They all show the same pattern.
I love the broadly weighted one, though. I always go to that one if I really want to know how's the dollar doing. If I don't have time to look at every single cross, that's the one I like to use. So I just wanted to tell people that's the one we were looking at. Yeah, and the other point is you mentioned is that it's incredible how there's a 5-month difference again between the two bottoms that we see there. And you mentioned that it's not a coincidence, that it's fractal. I can't wrap my head around it, Jeff. Can you help me understand how this incredible miracle coincidence is not a miracle or coincidence, but it's mathematical fractal?
It's how it's repeating patterns across time scales or any other types of scales, which you'd seem that markets are supposed to be random. Things are never supposed to repeat, but yet we see things repeat time and again, even on some smaller scale patterns, which suggest fractal behavior, which is simply there's an underlying deeper fundamentals at place where markets respond to the same types of inputs in a somewhat the same way, despite differences in periods of time or differences in ages or epochs or whatever else. It's just maybe there's an underlying humanity involved here in how we interpret data and how even complex and large systems react to changes in data, and because that's just the way we do that. That's the way humans actually do that. And so it's not necessarily, to me, surprising to see a fractal pattern show up in something as utterly complex and huge as even the dollar's exchange value, because it's essentially when you think about it, as we're trying to do here, boiling it down to small number of variables and small number of cases, what we're really saying is this is the way a fragile system responds to negative stimulus or negative inputs. And maybe that's just the way that we do this. The way the markets do this is, for all the sophistication and computer technology and reach and everything else, it's just the way things are. That there's an underlying fundamental way that humanity responds to these types of situations. That's why it repeats. So that's kind of the point here. If you see the repeating pattern, at least if nothing else, it's, hey, there's something going on here. Maybe we need to pay closer attention to it and not just take everyone's word that things are going in the right direction and that, maybe it's just Delta COVID or some other thing. Maybe there is other things going on that nobody else discusses, because either they're afraid to discuss it, or like the Federal Reserve, the last thing they're ever going to do is discuss why they screwed up all this time.
There are many reasons for hoping that the euro-dollar malfunction ends and that we enter the new golden age. One of them, for me, is, Jeff, so that you can retire from this economic analysis stuff and go into your true love and mathematical philosophy and studying physics and writing about that. So I really like that explanation you gave there at the end. Jeff, that's it for me.
Yeah, and I think, Emil, that's our goal here, is to the day where nobody cares what we have to say.
No.
That's what we're really shooting for here.
But
most people want to grow their audience. I look forward to the day when nobody has any, that we don't need him anymore. Emil, we don't need, Emil's always going to be popular because people don't want to hear from you. But at some point, there will be a day where nobody will care about Eurodollars or the monetary system, because it will have finally been dealt with and fixed. And we won't have to worry about dollar shortages and the inevitable squeeze and the economic consequences. John Maynard Keynes' evil, we'll keep talking about that in the labor market and how it's, the hidden suppression there. I look forward to the day when we don't have those problems. As you pointed out, I do have children, and I would like for my daughters to live in a world where they don't have to go through these periodic issues that just, they're leading us in the wrong direction. And worse than that, they're leading the world in the wrong direction with very little answers for it. Nobody seems to be able to identify cause and effect because nobody's looking at these things. Everybody's thinking, Jay Powell said he flooded the world with digital bank reserves. That must be money. Not only that, in 2021, what is the overriding monetary theme? That there's too much money, right? The reverse repo. Everybody's talking about too many reserves, too much money. So we're not even looking in the right direction. We're looking in the exact opposite way and taking everyone's word for it that there's too much money this year. It's just, Yeah, I look forward to the day when people start to ignore that and say, what's really going on with these things when things continue to turn out the way they're not supposed to, and almost always in the opposite way. The dollar's supposed to be going lower and lower and lower, and here we are, and it's September of 2021, and it's higher again. Why? Somebody please explain why. And for all the people who are claiming that inflation's coming, why didn't it come the last time? Why didn't it come the time before that? You never explain why inflation failed to show up in 2017 and 2018 or 2014 and 2015, which, I think seems to be kind of important in 2021. If you think inflation is different this time, what makes it different? Because I tell you, when you look around the real monetary system, it is not different. In fact, it's so not different that we're seeing these fractal patterns in the dollar's exchange value. That's where we're really fragile monetary system. You're not going to see sustained inflation.
Well, on this September 9th, the 4-year anniversary of the beginning of the end of globally synchronized growth. Jeff, that was a great show. I'm going to go have a drink to commemorate the 4-year anniversary, and I will talk to you again next week on the 16th.
Yes, let's raise our glass to the end of our own show. Let's look forward to it.
Beautifully stated. Very well. A bottle, because I'll be a little depressed, but yeah.
The whole thing.
Talk to you next week.
Okay, take care, Emil.